As a trader, you've probably gone through times in your career where you felt like the market is literally out to get you. Also, if you've studied markets, you know that there's these people called market makers, and they play a big role in how the markets move and function. The question a lot of people have when they study market makers deep is, are these people evil? Are these people really trying to take the money out of my account? Well, we're going to explore that question right now. Now, before we talk about whether or not market makers are actually evil, let's first consider what they actually do. Now, market makers actually, whether you know it or not, provide a very valuable service to the marketplace. Let's pretend this green dot is you, and you want to buy Tesla stock. How would you do that without a market maker? Well, you would literally need to go and find people who want to sell. You have to call up some friends, some family, some acquaintances, say, hey, do you want to sell me your Tesla stock? In fact, this is how they used to do it on Wall Street way back in the day. They literally used to gather under the trees on Wall Street and trade with each other until the market maker was born. Now that market makers exist, here's exactly how they benefit you today. Instead of you having to go out and find friends to trade with, now you could go to that easy buy and sell button that's on your dealing platform and simply click a button. But what happens when you click that button? Well, when you click that button, you can buy immediately. Who's selling to you? It's the market maker. They're selling to you. They're always willing to take the other side of your buy or sell position. But what do they do with that? Well, they immediately go and hedge their risk with other people like you that are also looking to buy and sell. They basically are making a market all the time so you can do whatever you want, whenever you want. But how do market makers actually make money for providing this service? It's very simple. They create what's called a spread, meaning that when they sell something to you, they already have a profit built in. And their idea is to do this with anybody and everybody as many times as possible. But is this the only way that they actually make money? No, it's not. Here's where we get into a little bit sketchy territory. Now, as you can imagine, the market maker's business relies on there being a lot of willing buyers and willing sellers at any given time. That's why market makers love markets that are sideways. A lot of mixed opinions, a lot of people willing to buy and sell simultaneously, which makes it easy for them to hedge their risk. But what happens when the market breaks out and you, your friends, and all their friends want to do the same thing? Who does the market maker hedge their risk with then? Well, the truth is the market maker gets sad because he then has too many sell positions. And if the market continues to go up, he's going to lose a lot of money. So what happens now? Well, he gets an idea. See, the market makers are sitting on a ton of cash and they could manipulate the markets to a certain degree. So what does he do? He decides, I'm going to drop a giant nuclear bomb of sell volume on the market to drive the price down. Now, why would he want to do that? It's pretty simple. He needs sell orders to get rid of these sell positions. He needs willing sellers. So he drives the market down through you, your friends, and all their friends' stop losses all the way down to a point of rebalancing. This easily allows the market maker to get rid of those sell positions, get more buy positions, and rebalance to a place where he's not losing money. But what happens next? Now here's where things just get a tad bit more sketchy. So what a lot of people don't understand about the market maker's business is that on top of creating commissions in the form of spreads from doing all these transactions, the market maker can actually trade from their own accounts just like you or I. They are interested in catching those big moves as well. So as this whole situation has played out, an opportunity has risen for the market maker. As they've driven this price down, the market now has changed shape. There are now traders looking at this and thinking, well, maybe the market's going down. So what happens? You, your friends, and all their friends now start to be convinced that they should sell the market. What kind of opportunity does this create for the market maker? Well, here's the thing. You, your friends, and all their friends have proven that they will aggressively buy the market. So this creates a situation for the market maker to whipsaw you out of even more money and create a huge profit center for themselves. As you, your friends, and all their friends sell the market maker takes the other side of all those sell positions, giving them lots of buy inventory. What happens next? Now, the rest of this process becomes super easy for the market maker. Here's what happens. The market maker simply cuts supply to the market, which causes prices to start rising. Those prices then hit your stop losses again, causing you to lose money and the market to rise up, putting the market maker well into profit. But now what happens? Like every profitable trade, you need exit liquidity. That means that the market maker is now buying. They need people to buy above them to sell to for a profit. Who's that going to be? You probably guessed it by now. It's you, your friends, and all their friends who are now chasing the market back up, getting whipsawed every single which way. That creates the exit liquidity that the market makers need to take a healthy profit and then continue their market making business, so on and so forth. And the cycle goes on and on and on forever. You losing money, them making money. You're probably thinking to yourself, geez, this guy just explained what's happened to me in the last 10 trades I've taken. Well, the question is, was that messed up what these market makers did to you? How do you feel about that? Are the market makers actually evil, or are they just smart? While I can't really speak for the character of individual people on Wall Street, what I can tell you is that it is a for-profit business, and these people understand the game. And if you are losing in the market, it's probably a result of the fact that you don't understand the game you're actually playing. If you're going to have even a fighting chance of making a sustainable profit in this business, you need to be very interested in how these guys conduct their business and then mirror what they do. If you want to understand every single move in the market and the meaning behind that move, you need to understand who controls liquidity and how they run their business for profit. Fortunately for you, the market makers run their business in a very predictable way. And even more fortunately for you, this is something that I've studied for over 13 years now. What we found is that the market makers run their business in a series of 3 market phases. We call these contraction, expansion, and trend. We call this entire pattern the master pattern. And what I've done is I've put together a free course that's 8+ hours long of me teaching my Inner Circle students everything about how I came to understand this. So go through that course. It's free. I have nothing to sell you there. Go to link in the description, check it out, and I'll see you on the next video.